Hi everybody, this is the Sentiment Timing Weekly Video Recap for Wednesday, June 24th, 2015. Hope you guys have been staying on the right side of the market, and let's get started. So we've had a lot of new emails. Welcome all you guys. And basically what we do at Sentiment Timing is we believe that human beings in the markets are irrational. There's always going to be an irrational element in the market, and that is exactly what creates market opportunities. Now, we find these irrational elements through Woody Dorsey's proprietary sentiment database, as well as his market timing technical models. So they look forward at potential turn dates that are going to be taking place, and from them we match them up with sentiment, and also do just a regular technical analysis. So the last video we put out, we had just a recap of it. We had said that we were looking for weakness. Now this is on June 12th. We had said this is going throughout that entire week. There was going to be weakness on June 12th and on the 15th. And from there, we saw the S&P drop 44 points and then rally back up. It's 92 points total in 5 days. Now, you may be saying, well, wait a second, the S&P lost 15 points today. How can you leave that at 92 points? And the reason is, in yesterday's report, we had said that this is the technical view of it, there were 5 waves up, and on the short-term charts, in that there was bearish divergences in place. Some backing and filling to the downside would make sense. And what Woody had said was that there was, probably not a great time to put on any positions yet. So this was here, and from there we actually had the drop. So we did actually, in our newsletter, we locked in. It would be, now again, we don't give exact trade signals. We give the ideas. So you have to do some work on your own as far as trades. We don't want to be a trading service, but we want to give you the ideas as far as what to be looking for. So it was short here, long here, and there is no real important date that is here yet. So it was more of a technical call, and from there we had a drop. So what is going on now? Well, we had a pretty sharp rise in sentiment, and that was one of the reasons why I started, as on a technical basis, counting the 5 waves. So we had 5 waves up. Anybody who's doesn't know Elliott wave, what it basically means is after 5 waves, you're going to get some kind of pullback that's going to retrace the high to the low. So being we had the high sentiment, being we had 5 waves up, we had bearish divergences, what the call was probably not put on any position yet, or basically looking for some backing and filling. And if we go to the chart, that is exactly what took place. So going back to this, what we were looking for was some kind of backing and filling, and in the downside would be the 2110 area. So the reason why I had mentioned the 2110 was because there's an open gap. So obviously the S&P went through that, and we don't really have any true bullish divergences in place. So we could get a little bit of a bounce, and what would make more sense on a technical aspect was we take out these lows, and from there we form a bullish divergence. And from there, if support holds, you could probably look to buy, because we're probably going to get a rally up into the next important turn date. And once that happens, we're going to see everybody extremely bullish again. They're going to be looking at 2,400 targets on the S&P. They seem to always throw out those big numbers whenever we're heading higher, and that's going to probably be right in time for the next black hole setup, which is pending in the 3rd quarter. So the last black hole we had the S&P drop 200 points right into the day. So that the report was released on this is August 19th, to look for a top on September 19th. That was the exact day. From there, the low was predicted for October 13th, and from there, it rallied 280 points. There's another one of these pending. We're not giving you those dates. We're still working out some things, but it is pending in the 3rd quarter. guess what next week is? Next week starts the third quarter. But we also have some important turn dates that are pending short term. So within the next 3 weeks, I think we have 3 or 4 of them. So we are going to start getting some big moves again. They're going to be to the upside, they're going to be to the downside. And eventually, they are going to lead into the black hole event that's going to have a massive drop and then rally again. So that is it's not even guaranteed that we're going to get the rally part, but what it is there's a black hole drop that's going to be pending. So all this is in line, and things are going to be starting to get pretty excited. And like I said, we have some important turn dates that are pending right now. They're in the not-so-distant future. And there's going to be a pickup in volatility. Now, the question you want to know is, who do you want steering your portfolio ship when the waters get rough? I mean, everybody is really good with Elliott wave. It's, when things are going in the proper direction, yes, anybody can trade the market. It's when we start getting these out of the blue moves like this or like this, where they don't expect the moves to come. Then your Elliott waves get wiped out. Everything pretty much gets wiped out. And that's where you need to be looking ahead as to when these turns are going to be coming. Are technicals lining up with the actual move, where we are in wave count and where potential targets are. So, like I said, we have some important dates that are pending. Things are going to start getting very interesting. And until next week, if you guys are interested, I think they're putting some kind of special on for this week. You can check that at the bottom of the page. And until next week, have a great week trading.